Rotating from growth to cyclical equities is one of our top investment calls for 2021. Despite the volatility in markets over the last few weeks, the fundamentals still support this call. Economic growth, particularly in the US, will likely re-accelerate in the coming months on the back of fresh fiscal support. Inflation should rise modestly, but the Fed will look through near-term spikes and focus on sustaining the growth recovery. This backdrop is highly supportive of the US housing market. The Fed's monetary policy is keeping mortgage rates at all-time lows. The Biden administration also has an accommodative policy toward housing. In its infrastructure and tax bill, which is likely to pass later this year, the combination of supportive monetary and fiscal policy will support housing demand. In addition, there are also two other interesting trends. The first is a more lasting shift towards working from home. The second is a trend for companies to move from more expensive northern and western states in the US to southern states with lower tax rates. These trends are creating new demand for housing. The clearest implication from all these changes is that home construction activity will likely pick up in 2021. We are adding home builders to our list of preferred sectors in the US equity space. Meanwhile, in Asia, housing markets have also been amongst the first sectors to see recovery. In Taiwan, Thailand, and Korea, house price appreciation in 2020 outpaced the average growth rates over the past decade. In China, Singapore, Indonesia, and India, house prices all increased in 2020 relative to 2019. Even Hong Kong's property market managed a small increase in prices last year. As the pandemic is still far from over, it's hard to see any Asian central bank raising policy rates this year, but we should not rule out macroprudential policies. Within Asia, investors can support a broadly positive view on the housing market through selective equity opportunities in Singapore and Hong Kong. In addition, China property bonds account for the bulk of the Asia high-yield universe. Some still offer attractive returns given the underlying risks. In an environment of tightening policies, we encourage investors to be more selective in terms of picking companies with more ample liquidity, moderate leverage, decent contract sales growth, and good access to capital markets.